Good afternoon, traders. This is the daily market update, and let's get into it. So right now we're looking at QQQ, and this is the 15-minute time frame. So in the past couple of days, we have been talking about this visual guide, this teal-looking line, as our visual guide of support and resistance. And it didn't go exactly as it did. It bounces off these resistance, pretty accurate during the cash open market. And if you zoom in a little bit here, you can see it only trades outside of it during the market and after markets. So after ever since last Thursday, we have been bouncing within this range. Let's see, and bounced here, went to the bottom of the range, bounced up, hit the top of the range, came back down, bounced exactly off of it again, closed the day right there. We gapped up during pre-market, then we came back into it during cash. We're at a cash open and closed within it. And that's when I was talking about yesterday, saying CPI will likely dictate if we break it or not. And we ended up breaking it due to we getting 5% CPI instead of 5.1, which was pretty much priced in, if you ask me, because those datas are released well ahead of not the exact data, but like the predictions. The consensus was 5.1%. That was released well ahead of the actual data coming out. And when we get something so close to it, it's very likely it's already priced in. So that's exactly what happened. So we had this bullish reaction, boom, and that 5% came in, and the core data was pretty much aligned. And I would say the core actually weighs a little bit more because than the other one. So you can see that right after this one candle, there was no more buying. And you can see we started selling into it. There's more selling into it. There's more selling into it. And right when the market opens, boom, it was all selling. And we went straight back into this visual guide wedge. And you can see we dropped exactly to the bottom of it again, bounced exactly up to the top again. And then we dropped again right after the Fed minutes came out here, and there was not a lot of surprising stuff there. It's actually very little volatility when the Fed minutes came out. It was like trading within the prior candle. It was just very small. And the only thing I've noticed was that it talked about recession in the later of the year, where usually the Fed does not mention that they're in their past minutes. They never really mention recession is coming, but this minute it did. And so that was something new. And after the little bit of consolidation, we just started dropping and just sped up over time. We couldn't try to bounce off of here a little bit, and then we broke through it. And now we are testing that 312.8, which is the level that once we break it, it's daily consolidation. See this level right here? That's the level when we break it. Daily consolidation is on its way. We did broke it a tiny bit. It was like the last 5 minutes, and we just bounced. And so we didn't have enough time to really test if we actually broke it or not. But it's for me, I would say it's broken due to if you go to the daily chart on the candles. Give me a second here. I'm just gonna erase that real quick. Okay, there we go. On the daily chart. All right, so this is how it works. So on the daily chart, once we broke this this low during the morning, that means the daily time frame uptrend is now gone. So now we're in a neutral trend. And once we broke this prior low, then there's a daily confirmed daily downtrend. See how it works like this? Boom. And then we broke below that, below the Thursday low. That is a confirmed daily downtrend. So right now we broke that by a couple pennies. I think it was like 1312.57, 312, by like 30 cents. And it was the last couple minutes, so we don't know if it's a confirmed break or not. But based on the after hour action, I'm going to say we're probably gapping down tomorrow, and it would be a confirmed daily downtrend. And so once we get the confirmed daily downtrend, we need to zoom out into the weekly time frame, meaning we will start looking for a weekly consolidation. Weekly consolidation just means it'll look like this. Boom. And once we broke below the candle, this one, below the prior candle, weekly consolidation underway. So this was a weekly consolidation. So it doesn't mean that we are like rolling over. It just means that we are in a weekly consolidation, meaning we will likely pull back a little bit. Prior candle will be lower than this. And then we have to see if the bulls can actually buy it back once weekly consolidation is on its way, and then continue its weekly uptrend or not. And the first thing the bulls need to do would be confirming their daily uptrend back to the bulls. Now, daily is on a daily downtrend. What I just showed you guys earlier, a daily downtrend. So, for example, a scenario would be like this. So, daily downtrend, and then we drop down here. Weekly consolidation's on its way, and the bulls buy out the dip, and then boom, and they confirm an uptrend. Then that will give us the bulls likely a chance to retest the weekly highs and to see if they can continue their weekly uptrend. If the bulls cannot confirm the daily uptrend back to them, then this daily downtrend will be the bear's guide for more downside. If it just, for example, if it goes down, mounts, and we dropped here, and bulls cannot confirm mounts, and bulls cannot break the prior high, and then we boom drop back down again, that'll be a continuation of the daily downtrend, and bears would be in control. So as of now, we'll have to see if all the major sectors drop together tomorrow, and once we break that level. As of now, if we go to the after hours, okay, let me clear this. Okay, so in the after hours, we have broken below the daily consolidation level, the 312.8. You can see we have been dropping about 0.2% after hours, which is about 60 cents. So, for example, tomorrow, what I'm going to be looking for is tomorrow we'll likely gap down and into this cluster of, see all this cluster of volume here? We're now trading into that. So we broke below the support. Now we're into this cluster. So likely, see, you can see more volume in this area. You can use a volume profile to check, but just based on these candles here, we potentially, let's say we gap down, right? Gap down to here, and then we bounce. Cash open, we bounce. And what I want to see is we retest this area. So I want to see the bulls buy in the morning, retest this area, bears defend it, reject, and then boom. That'll be a very convincing rejection for me. And if that happens, I'm just going to keep holding on to my shorts. I am still in shorts. I'm shorting the semiconductor sector, which is a lot weaker than the QQQ tech sector. So I am up a decent amount. So I have a decent amount of cushion to work with. So that's the most probable scenario, not probable, the most favorable scenario that I would like to see. So if this happens, then I'm just going to keep holding. And or or the bulls can't even bounce to that level. We just kind of drop down like that. I don't think it's that likely. Bears haven't been showing up that much lately, except for today. And today is actually the most notable bear day for weeks. Bears have been trying to confirm a lot of things lately, and it's only like their moves are only like 1 or 2 hours, and then they don't confirm a like hourly trend change, and the bulls just take over for the rest of the day. For something like this, in the morning, they drop it, and then bull just takes over for the rest of the day. Same thing here, they just drop it, and then bulls just take over for the rest of the day. It's been happening a lot for the past couple of weeks, and I think the bears today are finally showing up. You can see we finally confirm some sort of like hourly downtrend, and now we're confirming also a daily downtrend. So that's very notable. Tomorrow we'll have to see if SPY joins QQQ and Team Bear, or SPY is gonna try to hold. And for me, the most likely scenario would be SPY. It's likely to be joining QQQ as well. But anything can happen in the market, so got to prepare for all signs. And we have a PPI data tomorrow in the morning for 5:30, and then the banking earnings pre-market on Friday. So it will also be in the morning as well, before market opens. So that will dictate direction of the market. So let's say tomorrow we drop, and then Friday comes around, banking earnings are really good, and then potentially we go back up, or banking earnings are really bad, and then we make another leg down, or just come to neutral, and then we just bounce a little bit, cool off some RSI, chop around sideways. If banking earnings comes to neutral for Friday, because from here to here, it'd be a very notable drop. It's a 3% drop in just 2 days. So if that happens, up here, Friday comes along, banking earnings neutral, we can just bounce a little bit and then cool off things, and for the indicators into next week. So that's what I will be looking for. Just depending on the banking earnings, because there's a lot of fear going on right now that we have earnings recession, and so if it comes to neutral, it might the fear might go away, and then we actually might potentially bounce a little bit. Or if the we actually comes in really bad, then it'll confirm a lot of participants' fear, and then potentially we get another leg down. Yeah, that's all I will be looking at. Today is actually quite a long video, and it's been a pretty complicated market, so make sure to respect your stop loss and trade according to your plans, and I'll see you guys tomorrow.